Welcome to XRP On Moon. And today's update is not just another headline, it's the kind of moment that can shake confidence, trigger panic, and redefine the way investors look at digital assets. Imagine waking up to find that billions in XRP have potentially been compromised in what analysts are calling a black swan event, an extremely rare, unpredictable incident with massive consequences. That's exactly the scenario circulating right now across crypto communities. And whether this turns out to be a confirmed breach, a coordinated exploit, or a misinterpreted anomaly, the market reaction alone is already telling a powerful story. Within hours of the initial reports, XRP traders began noticing unusual on-chain movements. Massive transfers, far larger than typical exchange flows, started appearing, sparking speculation that either a whale was repositioning aggressively or something far more concerning was unfolding behind the scenes. Social media lit up instantly, with rumors ranging from exchange vulnerabilities to wallet-level exploits. And here's the thing, crypto markets don't wait for confirmation. Fear moves faster than facts, and that fear alone can create a cascade effect. Now, let's take a step back and understand why the term black swan is being used. In financial terms, a black swan event is something that comes out of nowhere, has a severe impact, and is often rationalized after the fact. In the world of crypto, where security, decentralization, and trust are everything, even a hint of a systemic issue can trigger widespread concern. And XRP, being one of the most widely held and globally recognized digital assets, sits right at the center of this storm. What makes this situation even more intense is XRP's unique position in the financial ecosystem. Unlike many other cryptocurrencies, XRP has long been associated with cross-border payments and institutional use cases. This means that any perceived vulnerability doesn't just affect retail investors. It raises questions about the infrastructure supporting potential global financial integrations. If something truly went wrong, the implications could extend far beyond just price action. But here's where things get interesting. Not all analysts agree that this is a hack. Some believe the large transactions could be internal movements between wallets, possibly linked to liquidity management or over-the-counter deals. Others suggest it could be a coordinated attempt to manipulate market sentiment, essentially creating panic to buy lower. And in a market where narratives can be as powerful as reality, both possibilities carry weight. Meanwhile, exchanges have remained relatively quiet, issuing no immediate statements confirming a breach. That silence is fueling even more speculation. Because in crypto, transparency is expected. And when it's missing, people start connecting dots that may or may not exist. The lack of clarity is almost as impactful as the event itself. Price volatility has already begun to reflect this uncertainty. Sudden dips followed by quick recoveries suggest that while some investors are rushing to exit, others are seeing this as a potential buying opportunity. This push and pull between fear and opportunism is what defines moments like these. It's not just about what happened, it's about what people believe happened. As we move forward, the key question becomes, is this truly a black swan event that will leave a lasting mark on XRP, or is it a temporary shock that will be absorbed by the market? History has shown us that crypto is resilient, but it's also highly reactive. And right now, we're witnessing that reaction in real time, because if this turns out to be something bigger, something systemic, then we may be looking at a turning point not just for XRP, but for the broader crypto landscape. And if it doesn't, if it's contained, explained, and resolved, then this could become one of those moments where fear created opportunity for those who understood the bigger picture. The situation continues to unfold. The focus has now shifted toward the raw on-chain data, the digital footprint that never lies, but doesn't always tell a simple story either. When analysts began digging deeper into the XRP ledger activity surrounding this alleged black swan event, what they found only added more layers to the mystery. Multiple high-value transactions, some moving tens and even hundreds of millions of XRP, were executed within extremely short timeframes. These weren't random retail movements. This was coordinated, deliberate, and precise. What immediately caught attention was the structure of these transactions. Instead of a single wallet dumping or transferring funds, the activity appeared fragmented across multiple addresses. Funds were split, rerouted, and in some cases recombined, creating a web of movement that made it difficult to trace a clear origin or destination. This kind of behavior is often associated with attempts to obscure transaction trails, but it can also be used in legitimate liquidity operations by large entities. Now here's where things get even more intriguing. Some of these wallets had historical ties to known exchange clusters, while others appeared relatively dormant before suddenly becoming active during this event. Dormant wallets waking up at the exact same time as massive transfers. That's not something analysts ignore. It raises questions about whether these wallets were pre-positioned long ago for a moment like this, or if access to them was recently obtained. Another critical detail lies in the timing. The majority of these transactions occurred during a window of lower market liquidity. This is important because executing large transfers when fewer participants are active can amplify price impact and reduce the chances of immediate counteraction. In simple terms, if someone wanted to move a massive amount of XRP without drawing instant resistance, this would be the time to do it. But was this an exploit or strategy? Blockchain forensic experts have started comparing this pattern to past incidents across the crypto space. In several historical cases, similar transaction fragmentation was observed during exchange breaches or private key compromises. However, there's a key difference here. So far, there's no confirmed report from any major exchange indicating a loss of funds. That absence of confirmation is keeping the hack label in question. At the same time, some independent researchers are pointing toward the possibility of over-the-counter settlements or institutional repositioning. Large entities often move funds in complex ways to avoid slippage and maintain discretion. But even then, the scale and synchronization of these movements are unusually intense, even by institutional standards. And then there's the theory that's gaining quiet traction, the idea of a stress test. Some believe this could be a deliberate attempt to test the XRP ledger's capacity, liquidity response, and market behavior under extreme conditions. If true, it would mean that what we're seeing isn't a failure of the system, but a controlled experiment within it. However, without official confirmation, this remains speculative. Meanwhile, retail investors are left trying to interpret signals in real time. Wallet trackers, blockchain explorers, and social media threads have become the frontline tools for understanding what's happening. Every new transaction is dissected, every address is analyzed, and every pattern is debated. This level of scrutiny shows just how engaged and how anxious the community has become. One particularly interesting observation is that despite the massive volume of XRP being moved, not all of it has reached exchanges. In fact, a significant portion appears to be circulating between private wallets. This suggests that if this were a hack, the attacker hasn't fully offloaded the assets yet, or possibly can't without triggering further alarms. On the other hand, if this is strategic movement, it could mean positioning is still underway. So where does that leave us? Right now, we're in a phase of incomplete information. The data is real, the movements are undeniable, but the intent behind them remains unclear. And in markets like crypto, uncertainty is often more powerful than bad news itself. It creates hesitation, volatility, and most importantly, opportunity for those who can read between the lines. The real battlefield has quietly shifted from blockchain data to the trading charts, because while headlines and rumors create emotional reactions, it is the order books, liquidity zones, and trading behavior that reveal how serious the market actually thinks this event is. Right now, XRP markets are showing something very specific: instability without collapse. That distinction is important. In a true catastrophic hack scenario, you would typically see an immediate and sustained breakdown in price structure, heavy exchange inflows, and aggressive panic selling across multiple platforms. But what we're seeing instead is a more complex pattern: sharp dips followed by equally aggressive recoveries, suggesting that strong hands are actively absorbing sell pressure. This kind of behavior usually points to one of two things: either highly confident institutional accumulation or controlled market stabilization efforts from large liquidity providers. In both cases, it means that someone with significant capital is willing to step in during fear-driven moments, and that alone tells us that not everyone in the market is interpreting this event as purely negative. At the same time, derivatives markets are sending their own signals. Funding rates have started to fluctuate more aggressively, indicating a rise in speculative positioning. Traders are split, some opening short positions expecting further downside if the hack narrative escalates, while others are quietly entering long positions, betting that the panic is either overblown or temporary. This tug-of-war creates a highly volatile environment where price moves can exaggerate even minor news updates. Now, one of the most critical observations comes from exchange behavior. Despite the panic circulating on social media, there has not been a proportionate surge in XRP deposits to major exchanges. In previous confirmed security breaches across the crypto industry, users typically rush to move funds off affected platforms, or exchanges see abnormal inflows as attackers attempt liquidation. That pattern is not clearly visible here, which raises further questions about whether this is truly an exchange-level exploit or something else entirely. Instead, what we are seeing is a more distributed reaction. Wallet activity remains active but not chaotic. Large holders appear to be repositioning rather than exiting completely. This suggests something very important: uncertainty, not confirmation of loss. And uncertainty is where whales thrive. Historically, moments like these have been used by large players to accumulate assets at discounted prices. When fear dominates retail sentiment, liquidity becomes easier to absorb without causing massive slippage. If you zoom out and ignore the noise, these are often the exact conditions where long-term positions are built quietly. However, we cannot ignore the psychological impact either. Retail sentiment is fragile right now. Every unconfirmed update, every speculative tweet, and every blockchain alert adds fuel to emotional trading behavior. Fear spreads faster than verification, and in crypto, that speed often determines short-term price direction more than fundamentals do. Another layer adding complexity is the lack of unified messaging from official sources. Without clear confirmation or denial from exchanges, developers, or ecosystem participants, the narrative remains open-ended, and in that vacuum, speculation becomes the dominant force shaping perception. Some analysts are even pointing out that similar fear-driven spikes have occurred in the past, where alleged security incidents were later traced back to misinterpreted on-chain activity rather than actual exploits. Large wallet movements, internal restructuring, or liquidity rotations have all previously been mistaken for hacks when viewed without context, but there is still one uncomfortable truth. Until clarity arrives, the market will continue to behave as if risk exists, and that is exactly what we are seeing: cautious trading, selective buying, defensive positioning, and heightened sensitivity to every new data point. So, at this stage, the question is no longer just what happened, but also who benefits from how the market reacts to what is believed to have happened. Because in crypto, perception can temporarily become reality in price action, even before facts are confirmed. The dust of confusion continues to swirl around this alleged XRP Black Swan event. The conversation is now shifting away from short-term price swings and towards something far more important: trust. Because in the crypto world, price can recover from almost anything, but trust, once shaken, takes far longer to rebuild. The XRP ecosystem has always carried a unique narrative compared to many other digital assets. It is often positioned not just as a speculative token, but as a bridge for global payments, institutional liquidity, and cross-border settlement infrastructure. That positioning means that any event, even unconfirmed, that hints at systemic weakness instantly attracts attention far beyond retail traders. Banks, fintech companies, liquidity providers, and large-scale partners all monitor these signals closely because stability is not optional at that level. It is essential. Now, whether this incident is a confirmed hack, a misinterpreted liquidity movement, or a coordinated market anomaly, the perception alone creates a ripple effect. Institutional players do not react only to confirmed breaches, they react to uncertainty. And uncertainty is exactly what this situation has generated. In the short term, this kind of event tends to create hesitation. Projects that rely on confidence and predictability can experience delays in integrations, slowed partnerships, or increased internal risk assessments. Even if nothing fundamentally wrong has occurred, the need to verify becomes a temporary obstacle in itself. But there is another side to this story that often gets overlooked. Crypto ecosystems that survive repeated shocks often emerge stronger, not because they avoid crises, but because they are forced to evolve through them. Transparency improves, security frameworks tighten, monitoring systems become more sophisticated, and market participants become more educated about separating noise from real threats. If this event turns out to be non-malicious, such as internal wallet restructuring, exchange liquidity rebalancing, or large-scale institutional movement, then the XRP ecosystem may actually benefit from the scrutiny it is currently under. Why? Because every false alarm that gets analyzed in detail strengthens the tools and processes used to detect real threats in the future. However, if even a partial vulnerability is confirmed, the implications become more serious. In that scenario, it would not just be about lost funds or temporary volatility. It would raise questions about infrastructure resilience, wallet security practices, and the robustness of connected platforms. And those are the kinds of questions that take time, audits, and structural updates to fully resolve. Market sentiment right now is sitting in a fragile middle zone. It is not full panic, but it is not full confidence either. This limbo state is often where narratives fight for dominance. On one side, skeptics highlight the unusual transaction patterns as evidence of deeper issues. On the other, long-term supporters argue that the lack of confirmed breach reports suggests this is being overblown or misread. Meanwhile, large holders appear to be playing a waiting game. Instead of making aggressive moves, they are observing. And in crypto markets, when the biggest participants pause, it often signals that they are waiting for clarity before committing capital in either direction. Another important layer is how quickly misinformation spreads in situations like this. In the absence of official confirmation, fragmented data points get amplified, reinterpreted, and sometimes exaggerated. A single large wallet transfer can be labeled a hack movement, even when it may be routine liquidity management. This is how narratives can detach from underlying reality, at least temporarily. Still, even if the event is eventually categorized as non-critical, it will likely remain a reference point in market psychology for some time. Traders remember volatility, investors remember uncertainty, and algorithms often react to both. So the real impact of this moment may not be the transactions themselves, but the behavior it triggers afterward: more cautious trading, stricter monitoring, and heightened sensitivity to any large-scale XRP movements in the future. And that brings us to a crucial question. Does this kind of event weaken XRP's position, or does it stress test and ultimately reinforce it? The answer depends entirely on what is eventually confirmed. But in the meantime, the market continues to operate in reaction mode, responding not to certainty, but to the absence of it. At this point, after breaking down the on-chain behavior, market reactions, and shifting sentiment, we arrive at the most important layer of this entire situation: the long-term impact and what actually matters going forward. Because whether this massive XRP hack black swan turns out to be a confirmed security breach or a misinterpreted liquidity event, the market will not be judged by the rumor itself, but by how the ecosystem responds in the aftermath. If we zoom out, XRP has always operated in a highly sensitive position within the crypto landscape. It is not just another speculative asset sitting in isolation. It is deeply tied to narratives of institutional adoption, cross-border payments, and financial infrastructure integration. That means any event involving large-scale movement, perceived vulnerability, or uncertainty automatically gets magnified far beyond normal market reactions. Now, the key question investors are asking is simple: did something fundamentally break here? Based on everything currently observable, there is still no universally confirmed evidence of a systemic exploit being officially declared by major exchanges or core infrastructure entities. That absence of confirmation is critical. In real confirmed hacks, the pattern is usually very clear: platform announcements, frozen withdrawals, confirmed loss estimates, and coordinated security responses. None of that has been conclusively established at scale in this case, which keeps the situation in the unresolved anomaly category rather than a confirmed catastrophe. However, even in the absence of confirmation, the psychological damage can still be real. Markets do not wait for final verdicts before reacting. Traders adjust exposure, institutions reassess risk models, and algorithms recalibrate volatility expectations based on uncertainty alone. And that means XRP has already gone through a stress event, regardless of the final classification. What happens next will depend heavily on three critical developments. First is transparency. The faster clear, verifiable information is released, whether from exchanges, blockchain analysts, or ecosystem participants, the faster speculation fades. In crypto, silence is often more damaging than bad news because it allows narratives to grow unchecked. Second is data consistency. If further on-chain analysis continues to show that funds are circulating in patterns consistent with internal transfers or liquidity operations rather than exploit-driven exits, confidence will gradually stabilize. But if contradictory patterns emerge, such as confirmed unauthorized drains or exchange-level losses, then the narrative shifts dramatically. Third is market absorption. Even in negative scenarios, crypto markets have repeatedly shown resilience over time. Liquidity returns, sentiment resets, and price structures rebuild. What matters most is whether participants still view the asset as functional and relevant after the shock. Right now, XRP is sitting in a critical psychological zone where fear and opportunity overlap. Short-term traders see volatility and risk. Long-term participants may see potential mispricing driven by uncertainty rather than fundamentals. This divergence is exactly what creates the sharp swings we've been witnessing. It is also important to recognize a broader truth about crypto markets. Not every black swan label actually results in long-term structural damage. In many cases, events initially perceived as catastrophic later turn out to be misunderstandings, misinterpretations, or temporary liquidity distortions that the market eventually absorbs and forgets. That said, this moment is still unresolved, and until clear confirmation emerges, caution remains the dominant rational stance. Overconfidence in either direction, assuming it is definitely a hack or definitely nothing, can both lead to poor judgment in fast-moving conditions like this. So, what should investors actually watch next? The most important signals are not social media claims, but verified on-chain confirmations, official exchange statements, and sustained wallet behavior over time. If abnormal movements continue without explanation, concern remains valid. If activity stabilizes and aligns with historical patterns, the fear narrative weakens significantly. In the end, this situation highlights something bigger than XRP alone. It shows how quickly perception can shape market behavior in the digital asset space, and how fragile confidence can become when information is incomplete. It also reinforces why due diligence, patience, and verification are essential in navigating high volatility environments like crypto. And now, before we close, here's an important financial disclaimer. This content is for informational and educational purposes only and does not constitute financial, investment, or trading advice. Cryptocurrency markets are highly volatile and risky. Always conduct your own research and consult with a qualified financial advisor before making any investment decisions. This is XRP on Moon, and we will continue tracking this situation closely as more verified information becomes available.